Hey, look, before you ever place your first trade, before you spend hours trying to find the most perfect strategy from this video and this influencer and this day trader, you need to learn these 3 key components, or else you're gonna end up losing money and you're gonna have to learn the hard way. Hey, look, I'm KSTACCS, a binary options and futures day trader, and we about to get into these 3 key and specific tips that I wish I would have learned, or I wish I would have had a better understanding before I jumped into placing trades, before I jumped in to the trading space and trying to make a living off trading and day trading or investing. The first thing is gonna be liquidity. Liquidity, liquidity, liquidity. The market moves. If y'all hear people clapping and going crazy over there, if you don't know, I'm moving right now. I'm in the process of moving, so we're doing a lot more stack talks and free game. But I'm over here at a park right now. I think I'm next to a CRC. I don't know if it's a graduation or they over there having a game at like water polo or something like that, but they going crazy over there. So just try to ignore that if you can. I'll do what I can in the editing to take it out. But back to the first thing, the market moves because it's searching for liquidity. And what is liquidity? Liquidity is turning an asset into cash. So in trading terms, without changing its price. So where in the market are the buyers buying and the sellers selling and turning it into money, turning it into cash? Where is the liquidity at in the market, if that makes sense? Where is price being sold? Where is price being bought? Where is the key support zones, resistance zones, higher highs, highs of the day, lower lows, lows of the day? And that ties into liquidity with market structure. Understanding how the market moves, not trying to figure out what indicators that you're placing. Let me get rid of this gun. Not trying to figure out what indicators that you're placing on the market to make money, because it's a million different indicators. You feel me? It's always something that you can put on the charts, or something that somebody's telling you, an influencer, whatever the case may be, that's the right indicator that's gonna change the way you trade. But at the end of the day, if you don't understand just basic market structure, liquidity, what the market is doing, the overall trend, price action is never going to click to you. What is price action? Price action is how price moves, because you don't know the basics of the market, of how the entire market is moving overall. So that's the first thing that you're going to need to learn is liquidity. And like I said, I'll repeat it again, liquidity is where in the market is price or is the asset or said asset turning into cash. Okay, cash is the quickest form of liquidity. Now, for example, a house, if you're looking at it in the terms of liquidity, a house or something like that is illiquidable. Why? Because it takes time to turn a house into cash. You usually got to renovate it. You got to usually put things into it. Got to make it new. So it takes a good amount of time to turn a house into cash. But in the market, you're looking for areas that are turning that specific asset, whether it's gold or Euro USD or the NASDAQ, S&P 500, where is that asset turning into cash within the market? So understanding liquidity is going to change the entire game of how you trade, how you look at indicators, how you look at price action, okay? The second thing is going to be timing, the timing in the market. Because the beautiful thing about trading is you can trade pretty much 24/7. Now, the futures market, stock market, is open 5 days a week, closed on Saturday and Sunday. Usually open from, or usually opens back up on Sunday at 4 or 5 o'clock p.m., closes Friday at 2 o'clock. So the market hours look the same all week, around the same times, have the same volatility. There's areas where there's time frames when price or liquidity or volatility is at a high, and then there's times where it's a dead zone. For example, if you're in the US, we're gonna be mainly trading the New York time zone with the London overlap, or London going into New York when the market opens. Cali time, I gotta be up at, the market opens at 6, but I gotta be up at 5 o'clock, 5:30, watching what price is doing, seeing how price is trending into the market. Then you wanna wait a few minutes. You wanna wait about 30 minutes. You don't wanna get faked out by a pre-move that market made or a pre-market move. For the East Coast, some places is different, but they up at 9 p.m. So you don't want to get locked into thinking, even though you can trade at any time in the day, at any second in the day, especially if you're on binary options, there's the OTC market. So then therefore you can trade on the weekends as well, literally 24/7. But you don't want to get locked into that. Because at the end of the day, you want to be professional. You want to take it serious like a real job. And you don't just go into work when you're not supposed to be at work, do you? When you're at your 9 to 5, you're not going in after 5. You're not just going in just to work, right? So treat trading the same. You feel what I'm saying? A good setup at the wrong time can change your whole outcome. So a trade at 8:30, a trade at 7:30 in the morning could be green, profitable. But you take that same trade at 9:30 at night, 10 at night, when the market hasn't really opened up for us. I mean, it's open, but it's at a low. It's not volatile. That same trade is probably gonna lose. And you're gonna be sitting there stuck wondering why your strategy works one time and doesn't work the next. When you're changing the factors of the market, you're changing the factors of your strategy. You feel me? You wanna have the same time frame, same session that you trade in for the most part, because we are on futures. But I started trading on pocket option, binary options, where you could trade at any time of the day, and it's a blessing and a curse. And I'm telling you now, learn from me, that you can absolutely make money on OTC, over the counter, or when the market's not open. But it's not the true market, because the market is closed on the weekends. So it's a replication of the market. It's pretty much, it's what I say. It's replicating what the market will look like. It's not the actual market. So stop chasing trades in low volume market sessions, low volume market times, and wondering why you're getting different results. And another thing is, when you speak into the time frame, a lot of times your edge, it's not your specific strategy, or it's knowing when to trade and it's knowing when not to trade while keeping it simple with your strategy. Are you counter trend trading? Are you trading with the trend? Are you trading support resistance? Are you trading certain setups in the market, whether that be a bullish engulf or a bearish engulf, head and shoulders, trading straight liquidity, where price is being bought and where price is being sold? Because they all factor in to the result or the outcome that you're gonna get. So number 2, like I said, is gonna be timing. Pick a time frame, pick a session, pick a zone, and master it. And then, honestly, one of the most important ones, if not the most important, number 3 is gonna be journaling your trades. Journaling your trades. It's just like an NBA player or an NFL player or a gymnast or a baseball player or a track runner. They watch film. They study themselves. They look at the film. It's one thing they say, the eye in the sky never lies. So if you journal in every single one of your trades, that's your data. That's your progress. That's the real. Your wins and your losses. Don't just be journaling when you won and you felt happy. Journalize your trades when you're losing and how you feel when you're losing and why you thought you lost, and come back to it and go over it, because that's your data. That's your ingredients to the sauce. That's how you master it and know, okay, and this pasta sauce that I'm making, I put a 0.5 of that garlic season. I put a little 0.7 of the onion powder. I throw a little bit of the fettuccine in there. You feel what I'm saying? So you know the right combination of what's working and what's not working. You feel me? Because at the end of the day, if you're not journalizing your trades, how do you know your results? You only gonna know your results because of the steady decline that's going on your account size. You feel me? You missing out on opportunities to learn when you're not journalizing. Write down when you entered, why you exited, what you felt, what you seen, what you thought, and what happened. And go over it and review it and review it and review it. The fastest way to improve your trading is looking at your trades and what you did within your trading session, so that for the next time you can make sure, okay, last time I bought a little too early on the fake out and it continued down into the bearish engulf. I thought price was going upwards because it dojied and it gave me 1 or 2 candles upwards. So I'm like, okay, cool, price is bullish. But it was a fake out. And this, when I took this trade, it was 10 at night, where price hadn't decided its trend yet. It was still setting up, trying to figure what it wanted to do. And it got me. It got me on that bearish engulf. So next time, I'm gonna be patient. I'm gonna wait for the full engulf or full reversal to play out. And then I'm gonna go with the trend. I'm gonna wait for the next zone. I'm gonna look for that inversion fair value gap and look for where the next zone is. Okay, the next zone is about, I'll show you in here. The next zone is about up here. This is where price reverse. We know we got all of this in here until it hits that next major zone to either continue to go up towards it and break back down and resist it, or break through it and set the new trend. But you only know that by what? Looking back at what you did. journalizing what you did in the time and in the moment. You feel what I'm saying? So please, 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 before you enter into your first trade, master as best as you can, because experience is the best teacher, but have your best understanding of number one, liquidity, number two, timing within the market, when you're going to trade, what session you're going to trade. Are you going to trade strictly New York? You're going to trade the overlap of London and New York. You don't trade the low volume times in the market. And number three, y'all, number three, journalize your trades. It's going to be a game changer, I promise you, because you can become profitable in these markets, but don't expect it overnight. Usually what's gained overnight is lost overnight. So if you're expecting to become profitable overnight, then expect to lose it all overnight as well. You feel what I'm saying? So stay diligent in what you're doing. Don't give up, and make sure, look, you master liquidity. Say it with me, liquidity, where is the market turning this asset into cash? Your timing, when you're trading, you feel me? What sessions? And then number three, simply journalizing. Make sure you getting your data. Make sure you getting your stats so you know what, why, when, and how you're trading and you're placing trades. All right, y'all. But y'all already know what time it is. Until the next time, stack it up. Stay blessed. Peace.